Hey everyone, welcome back to Corporate Decoder, the place where we try to uncover if a company is selling units or just selling us dreams. And today we've got Lafayette Digital Acquisition Corp. Filing its 8K, which is essentially a report on major happenings. Now this filing is all about the big splash Lafayette Digital Acquisition Corp I made with its initial public offering or IPO. Think of it as the moment this company officially started selling pieces of itself to the public. The company went public on the 8th of January 2026. This means people could start buying shares of Lafayette Digital. They called their public offering units, and each unit was a bundle of goodies. Inside each unit, you got one Class A ordinary share. This is like a standard share of ownership in the company. And you also got a quarter of a redeemable warrant. Now, a warrant is like a coupon that gives you the right to buy the company's shares later at a set price. So you got a piece of ownership now and the option to buy more later. The price for these units was $10 each. They sold a lot of them to 28,750,000 units to be exact. This means they raised a massive $287,500,000 from this IPO. That is a huge chunk of change. They also signed up a bunch of agreements to make this whole IPO thing happen. One key document is the underwriting agreement with BT LLC. This is basically the contract that lays out how the underwriters like BT will help sell these shares to the public. Then there is the warrant agreement with Continental Stock Transfer and Trust Company. This details all the rules about those warrants we talked about earlier, like when they can be used and at what price. They also set up an investment management trust agreement. This is super important for companies like this that are basically shell companies looking to acquire another business. The money raised from the IPO usually goes into a trust account. This agreement outlines how that money will be managed until they find something to buy. They also had a private unit subscription agreement. This is where the company's own sponsors like Lafayette Digital sponsor ILC and some other folks like BT bought units directly from the company before or during the IPO. This is often done to show confidence and also to help fund the IPO itself. Speaking of those private placements, they raised another $7,600,000 by selling 760,000 of these private units. These are similar to the public units, but often come with different rules about when they can be sold. The sponsors in BT were the ones buying these. They are essentially saying they believe in the company's future and are willing to invest in it too. Now, let's talk about who is running the show. In connection with the IPO, Jason Glazer and Robert Cusack joined the board of directors. This is pretty standard when a company goes public. They also formed a board with different committees like an audit committee and a compensation committee. The directors are divided into classes, with their terms expiring at different annual meetings. This is a common corporate governance practice to ensure a steady rotation of leadership. They also updated their official company rulebook, the amended and restated memorandum and articles of association. This is like giving the company a new set of bylaws to fit its new status as a publicly traded company. The company also put out a couple of press releases. One announced the pricing of the IPO on the 8th of January 2026, which is pretty much when they decided on the final numbers for the offering. The other one on the 12th of January 2026 announced that the IPO had officially closed, meaning all the shares were sold and the money was transferred. Finally, the report lists all the exhibits, which are the actual documents like those agreements we talked about. It is like the appendix that includes all the official paperwork. So what is the big picture here? Lafayette Digital Acquisition Corp has successfully completed its IPO, raising a substantial amount of money. This is just the first step for a special purpose acquisition company, or SAC as they are often called. Their main goal now is to find a private company to buy and merge with. They have a set amount of time to do this, usually around 2 years. If they don't find a suitable business to acquire within that time frame, they typically have to return the money to their shareholders. The fact that they've raised so much capital is a strong signal of investor confidence, but the real test will be what they do with that money in the coming months and years. They need to find a promising company to acquire, and that acquisition needs to create value for their shareholders. A major risk for SPACs is the pressure to complete a deal, often leading to less than ideal acquisitions. So investors will be watching closely to see if they can make a smart move. Overall, this filing marks a significant milestone for Lafayette Digital Acquisition Corp, as they transition from a private entity to a public one with a clear mandate to grow through acquisition. Alright, that is our breakdown of Lafayette Digital Acquisition Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.